Our channel deals in all things cash flow, capital, credit. So what advice would you give to our folks as far as starting to build credit, ultimately continuing that kind of bridge to better credit?
Yeah. Well, so, there's 5 factors of credit that FICO uses to work out your score. And the most important 2 of those, which account for 65% of how your score is worked out, would be payment history and credit utilization. So payment history is like, paying on time, whether you pay on time each month or whether you have a late payment posted to your account each month. Obviously, late payments will drop your credit score. And then credit utilization is the amount of credit you use. So the percentage of your credit lines you use. And these 2 factors together make up 65%. So for someone just starting out, they need to focus on these 2 factors. So what I would say is apply for as many credit cards as possible within reason at the beginning. I would say you could apply between 2 and 4 credit cards. This is just from building credit point of view, because the more on-time payments report to your account every month, the faster your score is going to grow. And then in conjunction with that, you want to keep your credit utilization as low as possible. So we say always keep your credit utilization under 30% of your credit lines. If possible, you could keep it even lower, even under 10%. Now, obviously, multiple inquiries within a short period of time will hurt your credit. But when you're starting out from nothing and you have no credit score, to have maybe two or three hard inquiries on your account. I mean, if you want credit cards, you have to have a hard inquiry, right? So you can't really get around it. Personally, I don't think it matters, because if you're starting from zero, you're starting from zero anyway. So your credit score, if you have between 2 and 4 credit cards reporting on-time payments every month, and you keep your utilization below 30% or even below 10%, you could actually be pretty much at 700 within 6 months. There are some other ways. For example, you mentioned no credit inquiry. You could go for a authorized user card on someone else's account. So what that is, people in the audience, some people maybe don't know, is that basically you can find someone who is responsible. They always pay on time and they keep their credit utilization under 30%. And then you can ask them, hey, can I be added as an authorized user on your card? They don't even have to give you the card. So you don't actually have to, they don't have to have that trust in you necessarily. Obviously, as a family member, they might give you the card, but if it's someone, colleague at work or someone with good credit, they can actually just not give you the card, but their credit gets reported on your credit report as if it was one of your accounts. And there are certain issuers that actually give you the whole history, not just the history from when you got the card, but the history from when that person got the card. So it looks like you've got a really long credit history, even though you've only just got a card.
Very interesting. So how would you also include utilities, for example, to help build credit?
You can. Yeah, there are ways of having utilities reported. For example, Experian Boost is a service provided by the credit bureau Experian, where you can basically link your utility accounts, and you'll get, as long as you pay on time, you'll get a payment reported each month for each utility that they find on your bank. So typically you have to do like a soft, a read-only access to your bank account, and it goes through your bank account. It'll find utility payments. And so when I did it, I tested it out. I did a video about it a few years back, just this one method, Experian Boost, but there's other ones you can use, but we'll use this as an example. It found one utility, which is my electricity, that could be, reported in this way. And basically it gave me an extra on-time payment each month. But actually for me, it didn't increase my credit score at all. But I think that was because I was already around 750. Because everyone who I've spoke to who has used it, who has a lower credit score, like in the 600s, it does actually work and give you maybe 7 points, 10 points extra on your credit score.
How would you go from let's say a 600 to a 700? And then how can you get from that ultimately to the perfect credit?
Okay, well, going from the 600s to above 700 is actually relatively easy, as long as you just pay on time every month and keep your utilization below 30%. And don't apply for
30. So below 30%, that's the absolute benchmark. You want to be below that, correct?
Yeah, below 30%. But obviously, if you want it to go faster, go below 10%. And utilization, it's only reported to the credit bureaus on your statement close date or the day after your statement close date. So you can go higher than that in the month, and then you can pay off your credit card several times, to get it below when your statement closes. So that high balance doesn't get reported. But yeah, high balances on credit cards really harm your credit score. I did an experiment once where I put $14,000 worth of payments. I paid my taxes with my credit card, and I put $14,000 on there, and the limit was $15,000. So, and I think my final balance was 14,333. And so it was around 95% or something, or 90% utilization. And it dropped my score by 50 points, just that one credit card, not even any other credit card. You know, I had like 10 credit cards and the others were below 30%. Just this one being maxed out had that effect on my credit score. So I found that as soon as you go above 50%, it really starts to affect your score on any card. So keep below 30% in general. If you're really trying to have the best credit possible, keep below 10%. I think right now I'm at 7% or something like that across all my cards. Once you get above 700, or 720 or something, you can pretty much get any credit card. But then if you want to build your credit score higher, some of the other factors, credit factors, become a little bit more important, like basically time, just the length of time, you know, your cards have been open, your average age of open accounts and stuff starts to, you know, help you build your score, you know, because in the first year, that time factor doesn't account for anything because you have no time. But after you've been open for maybe a year or two, the time factor starts to kind of help your score. And then there's also credit mix, different types of credit.
You can actually hit pause on that. So talk about what would be an average time that ultimately would lead to good credit. How many years with that credit line?
Well, there's no solid answer, but there have been surveys looking at people with 850 credit scores, and the average length of time accounts have been open with someone with an 850 credit score is actually 30 years. I did a video on this not too long ago. So the average time was 30 years, and many of the case studies of people with 850 credit scores, they'd had their credit accounts open for, say, 15 years, 22 years, but the average was 30 years. And actually, if you look at the number of people with 850 credit scores across the whole country, I think it's something like 96% of people with 850 credit scores are aged over 40 years old. And baby boomers accounted for 58% of people with 850 credit scores. So it really shows you that time does play a big factor when you're trying to get to those lofty heights of like 800 plus. The thing is, though, you don't necessarily need to get to 800 plus, because once you're above, say, 700, you can pretty much get approved for any credit card as long as your income is good and you don't have things like late payments on your report. Yeah, you can pretty much get any credit card. You know, improving your credit score above 700 really comes, it's more important for things like mortgage loan products. I think it's 760 is normally, you know, you can get the best interest rates above that level. If you can't get an 800 credit score, you know, don't worry about it. I mean, I call myself the Credit Shifu, the credit master, but my credit score is not 800. It's in the, you know, the mid to upper 700s. And, you know, that's because I often apply for new credit cards, and I do things that, you know, any activity often will bring your credit down a bit, like opening new accounts and stuff, because that gives you a hard pull. It also shortens your average age of open accounts. If you applied for, say, 4 credit cards 5 years ago, and then you don't apply for anything else, your average credit history is going to appear longer because you're not shortening it with new accounts opened up in more recent years, you know? So often those people, you know, the kind of person who applies for maybe 2 credit cards ages ago and then isn't really interested in it, but just pays them on time each month, might actually have an amazing credit score, like 800 or something.
Ben, I'm gonna let you run here. This has been an absolute pleasure. You're just a brilliant mind. We love your channel. Looking forward to further collaborations, obviously.
Cool. Yeah. Thanks very much. Thanks very much.
Thanks, Ben.
All righty. So I realize that some of you have not gotten one of the single most popular budgeting tools available, not to mention it's free, and that is called the Cash Flow Cruncher. So what I want to do today is walk you through the process of downloading your very own copy. It comes in the form of an Excel spreadsheet, so it's very easy to use, and it's quick to navigate. So let's go ahead and walk through that process together. Go to cashflowcruncher.com, which will take you to the download page. Simply type your email address into the field to claim your free copy, and go ahead and select the red button. Immediately, it'll pull up the download button, which will open a new Cashflow Cruncher spreadsheet. The first page it'll open is the Cash Flow Summary tab, which is a non-editable page. It's very important to understand that this opening tab will not require you to put any information into these fields. This actually imports the data from the other tabs below. Now, if you've ever used an Excel spreadsheet, you'll navigate the spreadsheet by going to individual pages down here. And it'll start with the revenue and assets page. On this page, you'll want to itemize each individual income that you bring into the household or the business. Now, it's always been my recommendation that you create an individual cash flow